following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Ask for what you want. Find the courage to ask for what you want. Others have the right to tell you yes or no, but you always have the right to ask. Likewise, everyone has the right to ask you for what they want, and you have the right to say yes or no. Market-wise, let's take a look at it out here. We have the Dow Industrials down 484, Nasdaq's down 87, S&P's down 44, gold contract up $34, trading at $12.27 an ounce. You have silver up 26 cents, trading $14.59 an ounce. Light sweet crude down $2.52, $70.65 a barrel. Notes and bonds, 10-year note up 26, 118.12. 30-year bond up a point and a half, 138.27. King dollar down 472 ticks, trading 94.705. The euro is at 115.92 to $1 US. The yen is at 111.95 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so what we're dealing with here, folks, is that we've been talking about this for a long period of time. You're talking about the February 9th high-volume swing low. S&Ps, they want it. They want it bad. It's into the top of it. The top of the high-volume low was 75, 275. The bottom of it is 252. So you're talking some numbers here, man, inside that S&P. This is a big problem for the S&P. You know, right now, when we take a look at this S&P, you are back where we were on the first week of January. So bottom line is that in the matter of 3 days, we've given up a whole year. We go to the Dow Industrials, the same type of setup inside the Dow. Dow Industrials right now, bottom line is that we've just gone from a price point of almost 27,000 to 25,000. You bring this back, you're going to see it sticking out like a sore thumb. The Dow Industrial's already into the top of it. You're into it by 500 points. Bottom of that is 23,360. That's where we're going. NDX 100, the Qs. We take a look at the NDX, same type of setup inside the NDX. NDX right now, you're at 69.53. Coming off the high of 77. I mean, you're down 800 points in the NDX 100. And what the NDX has just, it's not into the highs of the low yet. And that's what's going to make the NDX basically a much larger correction. So the highs of the low in the NDX would be 68.07. We went down to 68.92. Bottom line, I expect we're going to get there. The IWM, bottom line, this was the largest ABC structure down. Price projection is approximately 151. We're still at 153. We take a look at this. You're going to see what you have here in the IWM. We just hit the top of the high volume low. 153.79 is the number. We hit 153.59. You're barreling into it. I expect we're going to get down into it. And the small caps, bottom line is that looks like all the indices are going to basically give up their gains for the year. And we were talking yesterday about the aspect of managers getting out. Bottom line is I expect this is going to continue. This is what we have had out here is that you did have an additional nice down tick out here today. So now you have two down ticks. We have a minus 1793, and so the tick situation is basically there that you can start establishing the bottom. What's still not there is the aspect of the trend. It's not even close either, by the way. You're at 1.28 on the trend, and in fact, if you want to hear something that is really wild, we were talking yesterday that we're going through it with Jim as well as Mark about what signals you're looking for a bottom. Well, and I was talking about that trend, and what the trend was showing is that basically, bottom line, people were still buying. And sure enough, if you take a look factually, there was $2 billion yesterday put into the SPY as that was going lower. So the dip buyers still there. Bottom line, the way the trend is looking, the dip buyers are still there. Sad but true. Well, they got rewarded for so long. That will stop, folks. That will stop. We'll see what the flow is. And today, we'll get that number tomorrow. It was $2 billion yesterday, though. Gold contract. We got good gold. Gold, you get a breakout, folks. You broke out. You have the wide price spread. You have the volume behind the move. Up 33 bucks, 487,000 contracts, blowing away the consolidation we're in. And if you want to take a look at this intraday, as to understand how a long-time consolidation can get blown away, this thing was just laying right at the price point of that 1218 to 1220. That's where the sellers were. Once it popped, and it popped good. We did 487,000 contracts. That baby sets up now 1376, and we're only at 1226. The GDX, no matter what gold equity you're bringing up, folks, they're all doing ABC structures on the way up. You're doing 78 million on the GDX. You're blowing away your swing points out here. 47 million is the last swing point. So the GDX is set up to run to the 2293 area. XAU, same setup. XAU, big move, up $4. That thing now can run all the way back to July, which is 84.79. Gold Bugs Index, same type of setup in the Gold Bugs Index. Gold Bugs Index is up $9.61. That sets up run up to 182, and right now you're at 153. You got to remember something. The gold market is very small, folks. Once people stop piling in the gold market, okay, that is fast, furious, in a huge way. Notes and bonds. Notes and bonds also caught a bid. You get the 10-year note up 3.2 million contracts. It's a big number. And this is actually what it needed. This is going to be really wild watching this market. The reason being, folks, is that it's been a one-way market, as was the gold market. Bottom line, though, you have volume going into this downdraft. We came down with 2.6 million. You're going up with 3.2. So guess what? Notes and bonds are not dead yet. Dow Industrials right now down 386, NASDAQ off 57, S&P's down 33. Come right back. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow right now is down 300. You got the Nasdaq off 21. S&P's down 24. Let's go over to our man, Mr. Jason Path, as we do each and every Thursday at 20 past the first hour. Don't forget, folks, Jason kicks us off every trading day right here, 8:30 in the morning market kickoff. Great show. He also has an outstanding newsletter. The way you get this newsletter, you come over to our website at TFNN. You're going into featured content. You're going to see the Quantitative Edge by our man, Mr. Jason Path. You hit that button. Bottom line, you can hit subscribe. A month, 6 months, or a year. All come with 30-day money-back guarantee, folks. You have nothing to lose, everything to gain. Check it out right on the front page of TFNN. And we get Jason coming to us live from the trading capital of the world, beautiful Chicago, Illinois.
That's right, man.
That is the trading capital of the world, man, especially today and yesterday.
Oh, man. Great day to be here, for sure. That's for sure.
I'll tell you. Yeah, so are you visiting there? What are you doing?
Yeah, no, just spending some time in Nadex,
Cool.
Yeah, just do a few things with them and producing some videos and stuff, and just keeping it moving, man.
That's a beautiful thing. That's a beautiful thing. So, market-wise, what are you thinking here?
You know, obviously, you know, it's been an intense day across a lot of the markets, right? You know, oil's we're probably with a day breaking back below 70. Gas high to low has been between 315 and 329. Not that long ago, we were talking about how sleepy that market was, and a really nice high to low move in gas today. Obviously, gold, you know, to the moon. Wild day. Clearly, equities are going to take you know, center stage, and I, like a lot of folks now, as the clock turns to 3:20, there's 2 questions: how much faster does this go here the rest of the session, and then how does it open overnight? I think both are going to be pretty intense stories.
Yeah, well, you know, it's intriguing because when this thing started, I was looking at it saying, you know, if you put yourself in a money manager's place, do you take the money off the table ASAP? And the ones that did are going to score. The ones that didn't, I mean, we got a flat year right now. So we'll see where this shakes out the next 64 days. But bottom line, right now, folks, you get a flat market for the year, which is almost unheard of, right? I mean, that's
it's amazing.
It is.
Yeah, it's absolutely man. You know, it was a really interesting setup this morning because we had the CPI come out just barely light.
Yeah.
And the market turned back a little bit, especially the Nasdaq. Is positive incrementally, marginally most of the day. And I was thinking to myself, if it's a 0.1% miss on CPI, if folks think that's what's going to, save this deeper correction here, it just didn't seem to hold water. And we've seen the NASDAQ obviously turn over since, but, we'll see how it ends up. Volatility jumping back up a little bit here to close the session. I think it continues to work its way lower. We've seen a couple of, what's interesting too is, Facebook and a couple other names have held price a little better than others. Facebook, that thing won't break below 150, and it was pretty resilient yesterday. It's up to 154, actually gained on the day today. So some of these names that were oversold coming into this have fared a bit better. So we'll see how it sets up tomorrow.
There's no doubt. It's interesting that Facebook, that 149.02, we hit 149.16. That's that, bottom line, it was that high volume low, man. I mean, these things, it's going to be intriguing watching them, because if that S&P is going to go after that high volume low, it's a lot lower, man. I mean, and many of the equities folks have already done it. So when that happens, bottom line, I know it sounds insane, but guess what? We're already digging into that bar. The top of that bar on the cash S&P is 2763, and we're 30 points below it right now. So that thing's game. It's pretty. It's
absolutely,
we know that the elevator down is always vicious, but when you see something like this, it's like, wow.
Yeah. And you wonder how much is left. I mean, we start talking about the quants and the automated funds and the technical levels that are important. And, I think we've breached some, but not all. And, I don't think it's going to take much to trigger another wave of deleveraging, de-risking from those folks. And
right.
So
it's pretty wild. When you take a look at the NDX in general, folks, okay, that NDX, man, when that goes south, you just get out of the way, because in 4 weeks we just went from in 4 days we just went from 7,700 to 7,043. I mean, that is about as wild as you can get, So oil, let's talk about oil a little. I mean, it's interesting. Oil, bottom line, it looked like it, it had that Iran, bump up premium inside it. Then we end up getting, that hurricane coming in the Gulf. This baby, bottom line, is almost back in, it just got back inside its lower range, inside 71. It's like, okay, man, we game down to 62, 63. That'd be a mind blower, man.
Yeah, well, I think sentiment has played a part here. Just a de-risk, risk-off move. A lot of talk this week. I've been waiting for this story to bubble up to the surface. The demand destruction across EM, across other markets. That's really, the IMF is meeting this week. The IEA put out a note on lower demand again. OPEC cut their demand forecast for next year. For OPEC to be cutting their forecast at this point, I think should be taken seriously by markets. So we've seen demand really come back to the surface as part of the story here. And I think just oil, just in general, it just feeds off the volatility and the sentiment from the broader market when it moves this intensely. And, folks are selling, man, and trying to book any profit they can, I think.
Yeah, no, that totally makes sense. What Jason's saying, folks, is this. When you get a market that goes this quick, oil is still at highs. These big funds are in a lot of things. They're gonna take whatever they can get at this point, right? Mm-hmm. Yeah, where a profit is. I know, and that's so dangerous in itself, because it goes from sector to sector to sector. Like if you take a look at this XLE, the bottom line is that the XLE had been telling us for some time that oil wanted to go down, but guess what? It couldn't get over its May highs, but then all of a sudden, in 2 days, you go from 78 to 72. It's like, okay, man,
That's right. Yeah, it's a 2.5% move today. We could be well below 70. I don't know, well below 70, but we could break 70 by the end of this week. And the other thing is, we're heading into tomorrow, Friday.
Yes.
if the selling picks up, I mean, we're going to open at just a different place on Monday as well. So be interesting to see what happens into the close and then overnight. But and then gold, man. I mean, gold just exploded, right?
Yep.
Like,
It caught the bid.
We haven't seen a move. We haven't seen a move like that in gold in
a couple of years.
I mean, at least, yeah. So
right. No, it took everything out. It took no prisoners, and what happened. The gold market, Jason, is so small, man. I mean, people, they think the gold market is big. The gold market is tiny, folks, and all it takes is somewhat a buyer. And I think what it showed yesterday, the only stocks that were green yesterday were gold.
Right.
And that's really unusual also because that didn't happen in 2007, 2008. So there's a differential there. Do you know what I mean? It's totally a differential. Listen, folks, the way you get Jason's newsletter, you come over to our website at TFNN. You're going to go to featured content. You're going to see the Quantitative Edge, amazing newsletter. Check it out. Get a subscription right now. It comes with a 30-day money-back guarantee. And, of course, don't forget, every trading day right here, 8:30 in the morning, it kicks us off. Just go to TFNN.com. You have a great one, a safe one.
Man.
What's the weather like? It must be gorgeous, right?
It's cold now, man. Come on.
Oh, it's cold
It's October
already?
in Chicago, man.
Oh,
it's
my
freezing.
God, that's crazy. You're going to come down and visit us. It's 82
man.
degrees. Oh, cooking, brother.
Love it, man.
Thanks,
All right,
man. Okay, bye-bye.
See ya.
Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 313. Nasdaq's off 36. S&P's down 26. And so bottom line, folks, is that you're going to have the banks kicking off earnings coming tomorrow morning. JP Morgan is going to be the first one out. That's going to be out at 6:45 in the morning, and let's take a look at it. Bottom line is that these banks don't look any better than the broad market. You have J.P. Morgan. We just came down from a high of 119. You're at 108. You get 25 million shares traded out here. If we put this in a weekly, what is game out here, once again, is 103. This has been a consolidation. It's been a consolidation for a long period of time. In fact, if you do look at J.P. Morgan also, you're going to see that it's flat for the year. J.P. Morgan started out at the 106, 107 level. What is intriguing is that if you remember that David I think it's David Tepper, right? Is that his first name? Yeah, it is. David Tepper. So David Tepper, folks, has been and is one of the best money managers out there with one of the best records. And what did happen in July is that he bought the Carolina Panthers. Now, that being said, what the story is out here today, and this is where this is a heads up in itself, meaning that experience that he is taking assets out of the market. He took them out of the market, turning around getting hard assets, meaning he's getting, bottom line, the football team. That being said, though, check out the story, because the amount of money that he actually took out of the fund and closed the fund that he opened 25 years ago is big, big dollars. It's $14.8 billion, and he paid $2.3 billion for the Carolina Panthers. So Appaloosa's assets under management declined 20% since late January as the founder, David Tepper, withdrew some of his personal wealth to acquire the Carolina Panthers. The billionaire's firm also disclosed in a September filing that it closed the Appaloosa Investment Limited Partnership One, the hedge fund that he had formed 25 years ago. Investors were given the option of shifting their money into a separate Appaloosa fund. Tepper used his own fortune, much of it invested in the funds, to buy the football team. The firm's assets of $14.8 billion on August 31st, down from $18.3. So bottom line is that he took money off the table. Now you're going to see that that's more money off the table because of the fact that he did have to pay taxes on that amount. The heads up there, more than anything, though, is that you have a manager that is very qualified, huge earnings on a continual basis. Guess what? He took quite a bit of money off the table and shifted into different assets. And we'll see where this whole thing shakes out. But in this particular case, it looks like a very smart deal. We go over to the XLF. We take a look at the XLF. So XLF just went in 2 weeks from 29 down to 26. We're at 26.69. You are, look at this, it's breaking the high volume low. So we broke, yeah, this is serious business, man. So what we did is this. We broke 26.76. That's the February high volume low. Bottom line, now you get 26 on the table. This is big problems. This could be a decisive break. If this gets to be a decisive break, what you're going to see, like 30 bucks. No, let's see. 30 for 22 bucks. 22 bucks. Let's go to Garrow in Newport Beach, California. Garrow, what's going on, brother?
Hi, how are you, sir?
I'm doing great, man. How are you doing?
Good, thank you. Thank you for taking my call, sir. May I ask your opinion regarding SQ? Is this the $65 is the bottom, or is it going to go lower?
Let's take a look. So you get Square. This has been a rocket ship, folks. The low is 31 for the year. The high is 101. This just took a beating off the high in all of 6 days. It just went from 101 down to 65. So let's bring this back. Yeah, I wouldn't step in yet. It looks to me like 47.40 is the number.
Really? 47.40?
Yeah, and where I'm going with that, Garrow, is this. See, okay, so, when you take a look at it, that was the last time we had any kind of juice on the way up. That was December. And you can see it went all the way up, no volume. Now you're going to have high volume off the high. It's a problem. It's a problem, child.
Right.
And, this equity here is a rocket ship on the way up. And unfortunately, when you do go up that dramatically, there's nothing stopping it from going down. So check this out, folks. This is pretty wild, actually, Garo. So all as we've done on this pullback right now is a 0.382 retracement. And check, so what's wild, folks, is that a normal retracement, even in a bull market, is basically 0.382 to 5.0. A 5.0 is normal. And it's just that it's gone up so quick, you know? So I wouldn't step in the middle of it right now, man. You know, this is, you're going to have plenty of chances to step into this market, folks. I would not step into it because what has happened is that for so long, the market itself, every dip has been bought, every dip has been rewarded until it's not. And this is a until it's not moment, you know. Yesterday kind of said quite a bit in the aspect that the trend didn't get blown out, and then the numbers came in today that investors put $2 billion into the SPY. Well, guess what? That $2 billion is worth a lot less today. So, cooking, brother.
Thank you, sir. Thank you so much. I appreciate it.
Go
Thank
enjoy
you.
that beautiful bay you have there. I love that bay you have there. Let's go to our man Paul in Henderson, Nevada. What's going on, brother?
What's happening?
How you doing, man?
Oh, man. The past couple days have been crazy. So trading this TVIX, and the caller that just called before you, man, I helped, Square, excuse me. Square made my day today. The TVIX made my day yesterday.
Sweet.
And it's been fun, you know, but you have to be able to trade both sides of the market. I know some traders that I know only go long, so they're just trading things like the inverse ETFs, but shorting Netflix and Square, it's been fun the past few days.
It's fun, it's intense, and it's work. And just
it's intense. It's a lot of work.
Just
you gotta
stay
be
tight,
glued
folks.
to the screen.
Yeah, no, this is a market, man. We get a market, you know, and you know, this is not going to go away. When you get volatility inside a market, folks, which we have, most times, you know, it's going to be 6 weeks, 8 weeks of volatility. It'll calm down a couple of days here and there, but the volatility not only just doesn't, it's not like you get this and then it just goes away. It just doesn't, that isn't how markets work. And it looks to me that the way that all these stocks are trading, they're hitting fib numbers beyond belief. They're hitting swing points. The volume's there, you know, all of normal market situations. And the reality is that that's what we have because now the Fed put is off the table. So that's a whole different dynamic that folks that have been just trading since 2007 have never even seen, you know. So, hey, Paul, just stay right there. Quick break. We're coming right back, okay?
Will do.
Dow Industrials right now, folks, down at 348. Nasdaq off 38. S&P's down 28. Gold's up 33 bucks. Silver's up 27. Paul and I come right back, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow right now is down 369. You get the Nasdaq off 48. S&Ps are down 31. We're talking with our man Paul from Henderson, Nevada. We are talking markets. So I guess next few days, Paul, we'll see where this baby shakes out. But we get the financials kicking it off tomorrow, and we'll see whether they can save the market. I don't think they're going to.
Yeah, I mean, that's going to be interesting that it's right at earnings. I was hoping we could take a look at the diamonds, and if you could give me your opinion on if possible this is the bounce spot, because I'm in the camp that we're taking another leg down, but I know it's not going to happen just all at once.
Right.
And then I have another question. If I could ask you one more question after that.
No, I wouldn't be buying anything right now, and this is why.
Okay.
We're going to bounce, folks, and when you see the bounce that comes in, it's going to be extraordinary. That's how it works when you get markets that are fast like this. The reason that I wouldn't buy, and that's the first thing in all day long, actually, I was just watching these financials. Because the financials, let's say that the financials come in beyond belief. Great. That being said, these financials want lower price. And that's why I was looking at them. I says, oh, man, this is a trip. So, my take is that the J.P. Morgan's going to 103 or 108. So it's like, okay, man, they don't look like they're going to save the market. That's the first part. The second part's more important, and the second part has to do with when you have a down week, folks, and you're on a Friday, your probability of going up after a down week on a Friday is minimal. That's the bottom line. It's like, do you really want to stick your head out? I'm not saying do you, but that's the theory behind it. That's how it normally works. Like if you have an up week, on Friday, bottom line, the market normally is not going to pull back. When you have a down week, same deal. And then when I look at J.P. Morgan, it's like, okay, and if we actually get a bad day tomorrow, you could have a sideways day, but if we get a bad day tomorrow, then we will see that S&P on Monday hit that high volume low inside the S&P. Because that high volume low inside the S&P is still down another 20 points in the spot.
Yeah, that's a long way down.
It's a long way down, man. In 2 weeks, what we just did is this, actually, folks. We just went down 20 points this week, but that's an additional 20 points. We're at 273. It's 252. So I'd basically, you want some action, start trading the gold stocks, man. That's, if I'm right on the context here, you're going to be able to trade the gold stocks for about 6 months right now. Well, let's see, you probably get 4 to 6 months that we're going to have some big action here. Because once these things start, and I suspect what we're going to see in the next few days, you're going to see a lot of, you're going to see some funds that already piled in here. It was the only thing that was green yesterday. They're taking the B points out with volume today. A few of them, this is the second ABC structure on the way up. And they have a long way to go just to reach their April swing points. And my take is they're going to get there, because it was vicious on the way down. It's just like the broad market, folks, went up so dramatically that there's no floors to stop it on the way down. The gold market did the same thing. The gold market went down from 95, or I'm looking at real gold, 95 down to 72. Well, guess what? When you go down that fast, it's real easy to go back up that fast because you don't have any supply lines. So that's where I'd go. And then if the dollar does get, the dollar's inside its lower range, but if we get volume like we had today, tomorrow in the dollar, then you're talking real action. And you might have heard me say this the last couple of days. See, what I think's going on in the gold market is not just because of how the market's going down. What's going on in Iran is this, folks, okay, is that Europe wants to deal with Iran, and it's all about oil. And, well, it's about more than oil, but the oil is the big deal. They're trying to figure out a payment system. The payments, the gold payment system is in place. So my take is that is a different dynamic. It doesn't have to be all paid for by gold. The Europeans are going to figure out something else to get around our sanctions on Iran, but gold's going to be part of it. That's where I'm going with this whole deal. And now, if that's the case, you're going to see some action in a big way. But guess what? There's an article. It was interesting. There was an article in the Journal this morning about Venezuela. And so they think what Venezuela's doing is Venezuela's stripping all their gold out, sending it to Turkey to circumvent the sanctions in Venezuela. And then they're figuring that Turkey's turning around and basically pushing it over to Iran also. So I suspect, yeah, I know. It's really cool, man. I mean, it's intriguing. When I read the first article about a payment system, I says, hold it, man. The payment system, that's easy. That's, it's not easy in the aspect of we're talking about a PayPal and something like this. But when you start talking about gold bars, man, that's a no-brainer. Now, they're going to need a bigger payment system than gold because I don't think there's enough gold you can move around. But I think that's on the table, man. And so I think we get action. And if that's on the table, see, every time that there's a separate payment system also outside of the U.S. dollar, that's very dangerous for the dollar. Because when people get used to something, you get used to it and say, oh, this is pretty cool. I don't need any dollars anymore. Maybe we will start, doing a little here, a little there, and all of a sudden, and that could be one of the aspects of why the dollar's pulling back a bit. You know what I mean? So. And we'll know in a couple months. That's the reality. Because if these things really go to start rocking and go like a rocket ship, that's what's going on.
Well, as we were talking, the Dow, the diamonds just got right into the VWAP on the 15-minute. It gave it up about 150 points, and now we're going right after that level that we bounced off of. And that is about 25,000 on the actual Dow, right at that 200. So if we slice through that, I know there's going to be a lot of stops right underneath that.
And look at this. See, the buyers are still here, man. This is like sick, folks. I just pulled up the trend. The trend is at 1.07. Bottoms, 1.07 means there's as many people buying as there are selling. That's insane. You don't get bottoms with a 1.07 trend reading. And between the trend and the tick, folks, I only look at these when monster downtrends are in because they're very. Nothing is like 100%, but these things are very accurate gauging lows, and you need them all at the same time. And when you have a trend that is at 1.7, that is saying that people are buying. And guess what? Bottoms don't get made. Those hedge fund managers are saying, thank you, God, that someone's buying so I can sell to them. you know.
Hey, Tom, one last thing. I just had a question. Since I'm young trading and I look to you guys, the whole TFNN crew, for wisdom, so you guys have been around for a long time and you've stayed in the game, has there always been the gloom and doom people that the market's going to go to zero? There's the Shemitah, there's the this, there's the that.
Yeah.
I've heard it ever since I started trading, and
Right.
I mean, right now the market's coming down heavy, but has that always been there where people are just
Yes.
like, hey, man,
Yes.
the world's going to fall apart tomorrow?
Right. And then what happens there is this. When you sell fear, they can sell more product. The sad part is selling fear is so easy, it's sick, and people are fearful, so those guys and girls do good. And just selling fear in general. Fear's easy to sell, man. Don't believe it.
Yeah.
This world's a great world. It's a pullback. Yeah, it's bad, but guess what? We're not going, you know, there's no such, here, stay right there, Paul. Come right back.
All right.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow down 450, NASDAQ off 67, S&P's down 40. Talking with our man Paul from Henderson, we're talking about selling fear. So, Paul, you know, yeah, in this business, there's plenty of people that are always going to say that it's always going to be zero. What happened? So, in 2007, 2008, this is my take on it anyway. That made sense because that we went down so dramatically because there was so much fraud inside the mortgage market. So a couple different things ended up happening. And the sad case is that none of the banks basically bankers went to jail because they should have, because they destroyed so many businesses because of the fact that there's so much fraud going on. They knew it was going on. They sold it down. And so what happened simultaneously is that, you had the market go down, but then businesses went down, people ran out of cash, all of the above. Now, that, to me, that was once in a generation deal. I'm sure that's what they went through in the 30s. So, is this going to be, it might take, this is a vicious pullback? Yeah, it is. Bottom line, though, is that what you very well would have here, I suspect, if we go back and look at this S&P, it's going to be hard. If we go straight down to this number that I'm looking at, it's going to be really hard to break that number because the market will be so tired. The amount of energy that it takes to get down here, folks. And listen, we might be in a consolidation for a long period of time. It's very unusual how we went up. This is a non-stop deal on the way up. So bottom line, we'll see whether it's going to be a consolidation. But if you think that markets go like this on a continual basis, meaning go up, they don't. That's not how markets move. That's how they have moved since 2008. But guess what? An unusual time because the stimulus was huge. Now it's going to be back to a normal market. And a normal market, folks, you're going to have to prove that you can make money. Companies can make money on an environment that the interest rates are going higher. Dow right now is down 500, Nasdaq's off 71, S&Ps are off 43. Stay right there, folks. Come right back.
Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
Every business day, Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Tim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Always do your best. Take action on your ideas. Doing your best means to take action on your ideas. You can have many ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We had the Dow Industrials close down 545 points. NASDAQ down 92. S&P's off 43. Dow Industrials were down 2.1%. NASDAQ off 1.2. S&P's off 1.7. Gold contract up $33, trading at $12.26 an ounce. If we go over to that gold market, we take a look at gold, folks. What you're going to see is that gold launched, broke out, has the wide price spread, has the volume. We did 502,000 contracts out here today. This has been a rough gold market since April. April, we're up there at 1377. It gets down to a price point of 1167. Consolidates each and every time that we've been up to the 1218 price point. The sellers were still in control. Well, the buyers took them out and took them to the graveyard today, folks. Bottom line, you broke everything. You'll see gold will stop making its way back up to that 1337. Right now, you're at 1226. Let's go take a look at the silver market. Silver actually showed us last week a nice sign of strength. What we had out here with silver today, silver was up 1.7% as gold was up 2.7%. Silver's going to need a lot more juice, man. I want to see the juice come in. 95,000 contracts, not bad, but not like gold. The GDX, the gold stocks, they all went. They're all in ABC structures on the way up. You had the GDX take out its B point, take it out with volume. Bottom line, we did 128,000 shares inside the GDX. You blew away $19 and 11 cents as well as 1948. This baby is going to make its way up to 22.93. Many of the gold equities, Harmony came out of the gate this morning. That blew away its B point also. That B point was 192. 10 million shares versus 3.5. You can go through all of them. Bottom line is that they had the wide price spread, they had the volume, and they're buyers inside that market. Oil contract numbers. Oil came out today with numbers. Bottom line, between the sanctions on Iran and our own hurricane here in Florida, bottom line, oil gave it up with volume. You traded down $2.39. You're at $70.78. And that brings oil, folks, back inside the lower range. And so now what is game inside the oil market is $62. We were fast and furious on the way down the oil market. 743,000 contracts we did. We go take a look at the XLE. The XLE was showing us and telling us that oil couldn't handle it for a long period of time. But guess what? The XLE, that tried to get up to its high in May. That downdraft in May stopped it. Bottom line, in 2 days, we just went from $79 to $72.80. Has volume behind the move, wants lower price. Notes and bonds both want higher price. And what's going to get intriguing here is that, is this just a counter trend bounce? Or, in fact, do we have something going here that notes and bonds still don't want to give it up? At this point, my take is that we get a counter trend bounce. The reason I'm saying that, folks, is that the aspect that the Federal Reserve, we know the Fed's going to continue to go up on rates. Bottom line, when you have down markets like we have, totally makes sense. People want out of the market. You want your money back. That's the essence, okay? Never mind making money. You want your money back. Notes and bonds today have volume, so we'll see how it attacks. The 10-year is attacking this downdraft with a lot more volume. So if this launches the 118.28, that would say that, guess what? Bottom line, rates are going to continue to go lower. And if we go over to King Dollar, bottom line, did come down with volume out here today. It is inside its lower trading range. We did 28,000 contracts. Now, King Dollar, folks, is going to be coming into its strength from the 14th of June. Now, it hasn't been able to break that strength. That was a huge day. We went from 92,500 up to 93,995. Bottom line, we'll see what happens when we get down there, but you are barreling into that now with volume. We're going to have the JP Morgan kick us off tomorrow morning inside the banking structure. JP Morgan, folks, does not look to me like it's going to save the market. JP Morgan is down $3.33 out here today. You're at $108. JP Morgan also wants to go after its high volume low of 103. So my take is that the good old JP Morgan and the banks are not going to save this market. If we go over to the S&P, and this is where the big danger is going to come in general, the S&P right now, that was down another 6 points out here today. We are into your high volume low bar, and we're 3 points into it. 252 in the SPY, and right now you're 272. Big number. NDX 100, a larger number. In fact, let's do the IWM. The IWM is almost at its 1-to-1 ABC structure on the way down. 151 is the number. We are at 153 right now. The small cap is at the top of that high volume bar, meaning that we're at 153.79 is the top of it, 142 is the low of it, we're at 153. Bottom line, high volume lows, folks, get tested. This baby is going to get tested. Market-wise, what you have is this. We now are flat for the year. It's pretty amazing what can happen in all of 4 days. You know, if we take a look at the Dow Industrials, what you're going to see is that I can actually go back inside these Dow Industrials. Let me put this up for the year. And Dow Industrials, where are we here? Let's see. Yeah, there it is right there. So January 24,700. So we're 300 points above it. Bottom line, that is a problem in itself. The reason being, when I was talking about the last couple of days, is that money managers, they want to get out. The ones that did get out are the ones that can say to their clients, hey, listen, I made money, versus you staying in and you can see what's going on here. And bottom line, folks, is that you still don't have the makings of a bottom. When we're coming into the close again, the dip buyers were out there. The trend was still running at 1.02. That is not what makes markets. Stay right there, folks. Good eye man, Mr. Basil Chapman, coming up next, growling and prowling with us. Dow finished down to 545. NASDAQ off 92. S&P's down 36. We're coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow finished down 545, NASDAQ off 92, S&P's down 34, and we had monster volume once again, folks. In the indices, you did 1.2 billion. We did 1.1 yesterday. In the NASDAQ composite, you did 3.1. You did 3 yesterday. It doesn't matter what you want to bring up. Bring up the ETF structures. Bottom line is that the door is just never big enough to get out. The SPY did 270 million shares today. Remember something, we made a high with 100 million. You came down yesterday with 214. You came down today with 270. Monster number. Let's go over to our man, Mr. Basil Chapman, as we do each and every Thursday at 20 past the second hour. Don't forget, folks, Basil has an outstanding show here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. The way you get the opening call, come over to our website at TFNN. Just go into newsletters. You're going to see the opening call. Does come up with a 30-day money-back guarantee. You can get it for a month, 6 months, a year. Check it out, folks. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great, man. Yourself?
Very good. Thank you. Actually, we're still having quite warm weather.
Oh,
nice.
That's pretty
cool. It is raining a little bit, but it's warm.
That's awesome, man.
It is.
Yeah, totally.
As long as they extend that, I don't mind. I was saying the other day we were playing tennis, we should bottle this and open it up in January.
That's so true.
Have at least one day.
That's good that you can still be out in those courts. That's nice, man.
Right. So I'm looking at the Dow. Of course, we've got the Dow. On the left is the daily chart. In the middle is the weekly, and on the right is the monthly. I've made a little change to the monthly so that you can see, so viewers can see something I think is quite important. So we had spoken about in the Chapman wave. I'm always looking for that 4th and 5th highest peak, D or E, and we're always looking to see what's going to happen at that particular point. Many times over the many years that we've been doing this, you know that at a peak D in the daily, that's where I'll establish some kind of a short for my subscribers to my opening call. And often it's a good trade, but in this market, it's only been a short-term trade because very soon after that, you made a new all-time high. Except that this time on the 3rd of October, we went to 26,951. Just under 27,000 millennial level.
Yeah.
And there was a little doji candle, and it was leg E in the Chapman wave. And this little doji said to me it was inside something I call the inside track. It's a technique that I show subscribers. I like to look for channels within the channel. If possible, I'll draw 2 trend lines right at the top of the channel and right at the bottom. And I call that inside track repellent or propellant zone. And very often the price will go there and then boom, it gets repelled or it gets propelled from that particular level. Well, lo and behold, on the, I think it was a Wednesday, Wednesday the 3rd, I'm looking at it, so I said everything about it says to me that the stochastic is much lower. You've got a little doji candle. This looks to me like what I call a right arm extension. It wasn't, the technicals never really confirmed it. So we went short immediately the next day at the open at about 26,000, I think it was 670. And you can see what's happened. This, we've gone straight down. And what I said to subscribers this morning is that we want to take something off at this 200, this morning you realize we were actually at, look at this, the high was 25,683.
Yes.
And we closed after going to 24,899. You wouldn't have thought that early on, but I'd said this is a very volatile market. There's still a number of stocks that look like they need to make lower lows. So if the 25,020 level is hit, there's a trend line that I showed coming down there, right to this orange line, the 200-period moving average. We're going to take a little bit off, but we want to keep it. Why? Keep the whole as much as possible because this weekly chart is starting to show deterioration. Look, finally, the MACD, remember how strong every week I said to you, the moving average convergence divergence is rallying. All of a sudden, it crossed negative today. Of course, it's a weekly chart. We've got until tomorrow at 4 o'clock. But look at the stochastic went from the 96 area to 83%. That's not very good in 1 week. And now, finally, what I did was with the monthly chart, I want you to do this. I made this 9-period moving average a nice thick line. This is the green line. if you look at the turnaround where it rallied from the 64,069 level back in March of 2009, you remember the day of the lows, we bought the diamonds for subscribers right at the exact low on the 6th of March, and the 9th, the S&P made its low. And well, we kept it for, I think it was over a 50% gain. But it would be nice if we still held it, of course. Look at this line, this green thick line here. You can see there are very few tails underneath that.
Right.
And so basically...
Now, is that a monthly I'm looking at, Basil?
Can you believe it? It's a monthly chart.
Good. Okay, right.
This is a 10-year chart. Well, it goes back further. I'm saying 10 years from the low.
Yeah.
And lo and behold, that whole area between May and, I think it was, yes, August of 2015, and what was it? And I think March or January of 2016, that was a big consolidation. And there you saw a couple of those candles go underneath, and it's still closed on the 14-period moving average, but not the 9. And now look at this. All of a sudden, you've gone from 2016, not one candle below this line, not one candle. It held that 9-period moving average just beautifully, and that 14-period moving average hasn't been pierced once. So, so there wasn't any close below the 9 period. There were a couple of little spikes below, but it never even touched the 14 period. Now I'm going to show you something even more important. All of a sudden, in a matter of a couple of weeks, you've got this huge red candle. And I drew these vertical lines in just a short while ago to show you. Look, when the high was made at 26,616 in January of 2018, look how strong the MACD, this is the moving average convergence divergence, how strong that is. Look how strong the on-balance volume, it was flat all the way from July of 2016 to the beginning of 2018, holding in the 96% area. That is really bullish. All of a sudden, you started to come down, and I found that this rally wasn't really credible in terms of the technicals. I didn't get confirmation. Now you can see we've got 2.5 weeks. We're not even halfway through the month, but the MACD has started to go negative. That's the first time it's crossed below the red line, the slow-moving average. This is the 9-period differential, since it crossed above it way back in July of 2016. So it's a warning. It says to me, I don't think this is just a short-term pullback, and I went through in my show, excuse me, I'll do that again tomorrow at noon Eastern time in my Tiger Technicians Hour. I'm going to show monthly charts because this is the first time, if you look at the QQQ, look at this, the QQQ broke under the 9-period moving average in the monthly chart. Look at the IWM.
That's history, man. Yeah.
And look at that. It's not only that, it's under the 14 period. Of course, we've still got the whole month of October, but I think it's going to be a really bumpy month because of all the conflicting things. And you were talking about gold, and we're still long the dollar, and the dollar did fabulously. Just late today started to pull back. But if you think that it was at 88, it went to 96. Now it's just going sideways. It could start to arch over a little bit, and that would give gold for the first time a really good incentive. This is the first break of this long rectangle, and that's a very good sign that it's broken that long-term resistance that's gone on for weeks, months actually.
Yeah, months. Listen, folks, the way you get Basil's newsletter, come over to our website at TFNN. Go into newsletters, you'll see the opening call, outstanding newsletter, 30-day money-back guarantee. Basil, have a great one, safe one. We look forward to the show tomorrow.
Thank you very much, Tom. Have a great evening.
Thank you.
This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's go take a look at NIO from Paul from Henderson, Nevada. So NIO, folks, this is a manufacturer of electric cars as well as batteries in China. This is revenue-wise, it's pretty wild looking at this baby. They're looking to go. That's interesting. If that's going to be in U.S. dollars or won, I'm not sure. Let's see. Well, anyway, they're looking to go from $4 billion to $17.3 billion. And what did happen is this: is that the second largest investor in Tesla ended up investing to the tune of 11%, Bally Gifford, into this company. And as that happened, this fund put $553 million into it. Bottom line is that the equity took off yesterday. We went from a price point of $6.10 up to $8.35. You got to $6.92 today, and the real question is, if you were trading this, and I think Paul wants to day trade it, I'd let that baby get down to $6.42, where it broke out from. That's kind of how I suspect that, when you get a break top side, it loves to pull back, come with the low started from. If you get lighter volume, that's where you get some action at top side. If we go take a look at a few of the gold stocks out here, first off, we take a look at Harmony. What you're going to see, Harmony blew away its B point, blew it away with volume. Your B point out there is at $1.92. Your low is 142, so you get a 50-cent A to B, which gets you up to $2.13. Your swing point up there is 210. So we pull this back a little. Let's put this on a weekly, and you got game now on 251. That's how that baby's set up. In fact, it's an ABC up on a weekly also. An Eco Eagle, AEM. Take a look at an Eco Eagle. That also blew away the whole consolidation. So in Eco Eagle's case, you're talking about a $40 equity right now. You're at 37. We take a look at the ABX now. So this one here, I'm going to go slow on this one because this one is really cool and important to understand where this whole thing shakes out. So Barrick Gold, folks, is buying Rangel Resources, okay? And what's going to happen is that the chairman of Barrick is going to stay. He's going to be the chairman. The CEO of Rangel Resources is going to be the new CEO of the combined company between Barrick and Rangel Resources. Now, Barrick Gold took out a B point today with volume. Your A point is 953. Your B is 1179, so you're talking about 220. That sets up a price projection of 1328. Now, this is what the cool thing is here. The swing point is 1357. Now, that swing point, folks, is the July swing point, the July swing high. Bottom line, that says, number one, that's where we're going. And what that is going to do inside the... Now, so watch what happens here. This is what's cool right now. And, okay, so I talk about weighting structures a lot inside the aspect and understanding the weighting structures inside ETF structures, okay? So watch what happens here. And this is, you know, if you haven't been in the gold market, great time to get in it, folks. Check out my gold report. It comes with a 30-day money-back guarantee. If you have been in the gold market, you know how this deal goes. When these things go, they really go. Now, that being said, this gets better right now, and this is why. Barrick Gold is buying Rangel. They're paying 6.128 shares of Barrick Gold for Rangel. Well, if you take that and you look at it in the context of the GDX, this is so cool because this is totally different because they're both inside the GDX as a weighting structure. This is totally different. They are not going to trade separately. So right off the bat, you have an edge inside the GDX and the HUI and the XAU, rather. So watch this. So Barrick did an ABC up. Rangel's doing an ABC up. The A on Rangel is 59, let's say call it 60. It's a monster. It's a 13.A to B. Your C point is 70, so we're talking about 84 on an 84. That's awesome, man. 84 is a lot higher than... Okay, so 84. Oh, look at that. It's going to get you right into the downdraft from February. So bottom line is that you're going to see a big expansion. Okay, so now watch this. Now we're going to go over to the GDX. I'm going to take a look at the GDX, and I'm going to get you the weighting structures we put in the holdings. Now, what you're going to see here is that inside here, you're going to get Barrick Gold, okay, is 8.7%. Gold, Rangel is 4.5. Well, right off the bat, all you're going to do is you're going to add those babies up, and you're going to come up with, what, we got the 12, 13.2 approximately. So what has happened here is that Barrick Rangel's 13.2, Newmont's 10.6. You get over to Newmont, you take a look at what Newmont's doing. What do we have with Newmont? Newmont today took out a top of the consolidation. Now, this is what the difference would be. You have some of them that actually had already done an A to B. They pull back and they get ABC structures up. You get a few others like Newmont that's just taken out a consolidation. And when you take out a consolidation, the way you price gauge it is you take the top of the consolidation, which is 32. You take the bottom, which is 29. That's going to be 3 points. You add 3 onto 32, you get 35. You're at 32.72 right now. Bottom line, this, I suspect, is going to go up to the 35 point. My point in all of that, folks, has to do with the aspect that one company's taken over the other, so you get an edge trading the GDX. That's how this thing shakes out. If we get over to the GDX and we take a look at the GDX, this is what you have inside the GDX. GDX is an ABC up. Your B point is $19.23. Your A is 17 to 28, so it's approximately $1.98. Let's call it $2. That gives you $20.14. You're at 1987. Now, this is what also happens inside the gold market. The gold market, folks, whether it's going on the way up or the way down, likes doing more than a one-to-one ABC structure. Many times what you see a 1 to 1.382, close to a 1.50. We do not want to see a 1 to 1.618 because that's the end of the markets, and that's 2011. That's what that exactly, the gold contract, the physical gold contract, that's what that actually did when it went parabolic. Bottom line, I expect you're going to see more follow through inside that market, particularly we got on a Friday, markets, metals markets on a Friday, currency markets on a Friday can be really rough when you've been going down. They can be really cool when you're going up, because what you're going to have out here is that we had one of the largest short positions in the gold market coming into this week. Okay? Bottom line, this should have been, there was a lot of people that closed it out today. Not everyone. That's how this thing always works. You know, this hadn't been able to launch the 1218, the 1220 area, you know, for the last 2.5 months. Bottom line, you not only launched it, you launched it with conviction. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Let's go over to take a look at the SMHs. So, SMHs, folks, these, of course, are the semiconductor ETF equities. The low for the year is 93. The high is 114. And that 93, folks, you know what it is by now. That 93 is the high volume low from February. What you're going to see out here is, and this is going to be, so as we come into this high volume low from February, what you want to be able to do is gauge, are you coming into this with or without volume? Well, the SMHs, folks, look like they're going to fall apart because they are coming in with volume. Right now you're at 95.45. The high of that high volume low is 103, and the low itself is 93.88. You can see that we're already into that bar by $8. We're going to the bottom. We're not only going to the bottom, but this is where the problem comes in. We did 66.9 million at that February 9th swing low. Well, we've already done 59 million, and we did 20 million today. So this is going to be a big problem inside the SMHs. The reason being is that if you have a high volume low, you go into it with volume, the market's not done going down. In this particular case, it looks like you're coming into it with actually more volume. And if that's what you get, then it's going to be big problems for the SMHs, because what you're going to have there then is that you take the bottom of the consolidation, which is 93, you take the top of the consolidation, which is 114, and bottom line, that's saying that can go down to 73. That's how that shakes out. Big numbers. There's big numbers just about everywhere out here. If you follow moving averages, guess what, folks? All the indices now have broken all their moving averages. The thing that's amazing, I've seen plenty of fast markets. This, no doubt, is a very fast market that it could break all the moving averages within 2 or 3 days when we were way over the moving averages. So this is what you have out here today. The SPY took it apart, and remember something, that if you take apart whether it's a moving average, whether it's a swing point, whether it's a trend line, and you have wide price spread and accelerated volume, that's a move with conviction. And moves with conviction, folks, if you're going up, like gold went up today, it's a move with conviction up, you're going up a lot higher. If you take it out on the way down, you're going a lot lower. They're not one-day wonders out here. The SPY today blew it apart. The SPY on Tuesday, bottom line, this is what's so sick, was right at its 50-day moving average. Well, we just blew away in 2 days the 50, the 100, and the 200, and you blew it away with volume. The problem I see with the SPY is this, is that the low of the high volume bar is a lot lower. We're 20 points lower, and we've come down 20 points this week. So 20 points inside the Dow Industrials, when you take a look at, that's 2,000 points. If we go take a look at the Dow Industrials, we pull that up and see where we're at. The top is 25,500, so we're already into the bar by 500. The bottom is at 23,360. My take is that that's where we're going. Small caps, we're right at the top of that bar, and I suspect we'll dig into it tomorrow. The small caps also have monster volume. We've come down thus far with 156 million shares. The top of that bar is 153.79, and today we just closed 20 cents underneath inside it. Bottom line, I suspect that's where we're going to go. And if anything in this market, folks, you're going to learn that high volume lows, high volume highs love to get tested. If you hadn't checked out my book yet, you can do that right at Amazon. It's The Art of Time in the Trade. It has all these different theories inside the marketplace about price and volume. Clean book, meaning how you do price projections, all of the above. Gold Bugs Index, big move out here. Now, I won't get the volume. I know the volume is a monster out here. The Gold Bugs Index today, we're up by $10.60. We're at 154. It launched, and it looks like the XAU and the HUI, which are so cool. Now, these are so symmetrical. I mean, I haven't seen a head and shoulders low in so long, but this is a beauty, man. So in this aspect, when you do a price projection, you're going to take the top of it, which is 150, the bottom of it, which is 131. You get basically 19 points, which gets you up to the 169. That's the next move up. And if we move and we continue to move with the type of velocity that we have, you're going to get some big action. You got to remember something, that the gold market, physical gold, small market. The equities, even a smaller market. When I say a small market, folks, it's billions, but that's a very small market in the context of the type of money that is swishing around the marketplace out here. Some of the higher volume equities out here today, first off in the S&P, you had the banks got killed, folks. So check this out. So the banks are kicking us off tomorrow morning with earnings. And guess what? You're going to see that, yeah, the earnings are going to be great, and they're still going to sell it down. We just had the XLF go from a price point of $29 to $26.40. That is, I believe, already breaking. Yeah, this broke. Now, see, this is going to be a problem child. The XLF broke its high volume swing low of February, 26.76. And if we get down further tomorrow, because right now you're only 30 cents below it, that's not the end of the world. But if we go, let's say, $1 below it, get out of the way, because then you are talking a whole different animal. You're talking about decisive break on the way down, and then 19 is game. That's how that works. Well, 22 to 19. That'll be the next number. And, you know, if we take a look at the XLF, the differential in the XLF is one that never got up to its highs of 2007. You know, we actually take a look at the XLF and put this on a longer term. These banks went up with nothing. So it looks to me like the banks are still going to be in trouble. JP Morgan does kick us off tomorrow morning, 6:45 in the morning. JP Morgan is looking for big numbers. They're looking to do $27.4 billion in revenue. They're looking to make $2.26 to the bottom line. Good numbers, no doubt about that. They'll probably come in with the numbers. But guess what? That's not going to stop the selling from taking place. That's how most of the time this baby does shake out. Amazon, let's go to the king dog out here. Amazon right now is off the high of 2000. You're at 1719. Monster volume on the way down again today. Amazon looks to me like game into like 1460. That's where this baby wants to get into. Amazon has also come off its high with volume. When you come off a high with volume, your correction is larger than a normal correction. And in this particular case, because we hadn't corrected in so long a period, that's where I think we are. Remember, folks, you're coming into a Friday in a bad week on the way down. Get your stops in. That's the bottom line. If you'd like to test drive the gold report, folks, this is the time to do it. And no matter how many times you've test driven it, with our new website, folks, you can get over and test drive it 30 days. Check it out. Right at TFNN. It comes with, well, it's a 30-day money-back guarantee. That's what it is. Stay right there, folks. I'm coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, if we get overseas and take a look at overseas, so we know, bottom line about markets, tough markets, downtown in a big way. Well, Asia last night was really tough, folks. You had China was down 5.5% to 6.5%. You had Japan down 3.5%. The Hang Seng in Hong Kong was down 3.5%. Let's go to the Hang Seng first, okay? So you're down 3.5%. We were down 926 points yesterday. We take a look at this as the setup. So this baby blew away its swing point lows with volume, okay? Gapped lower. You get a monster ABC down. This is really a problem. Let's see, 31,500. Wow. Okay, so it's a 4,800 A to B. Yeah, you get problems here, man. This thing's going on at 22,000. So this is going to gap lower again tonight in a big way. The Nikkei, let's go take a look at the Nikkei. The Nikkei came down hard also, which Nikkei came down, oh my God, 915 points, 22,500. Monster volume on the move down. Nikkei is game into, and what's going to happen here is that the yen, oh, I see what's going on. Okay, so yeah, oh my God. So the Nikkei is going after February 9th also, folks. 21,000. That's 1,500 from where we are. That's, and the Nikkei actually tested that. But guess what? Bottom line, then it tested the high. So this is the Nikkei might be something you might want to look at, because this might be the consolidation that we end up being in. The Nikkei had the high volume low of February, tested it, got to the high, couldn't handle it, tested it with lighter volume, blew off the high, coming downtown again. If you go over and take a look at the yen, you're going to see the yen's getting stronger. And the yen being stronger, folks, puts a big bid inside gold. The yen's at 112 right now. It looks like the yen wants to make the run to 110. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right back here tomorrow morning, 8:30. Join Jason. Wow! Go get him, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.